Welcome to the deep dive. U.S. financial systems can seem so complicated,
Oh, no, absolutely.
especially if you're trying to launch a business here, but you're also navigating all these other layers. Maybe you're a non-resident or you're just starting from scratch with your credit.
Exactly. And today, we're not just, summarizing rules. We're really
Yeah.
trying to extract that foundational knowledge you need to go from an idea to a legitimate, financially resilient business.
Right.
Our mission is to give you a clear, step-by-step path.
Yeah.
We'll focus on three critical identifiers, the
Mhm.
SSN, ITIN, and EIN, and connect that directly to how you actually get funding.
And here's the crucial starting point, I think. It's a real nugget of insight that often gets missed. The UI system allows individuals, regardless of their current legal or residency status, to legally earn a living as an independent contractor or to start a business using one of these three numbers. That's the freedom we're going to help you unlock.
Okay, let's unpack this. We have to start with the three official ID numbers from the IRS and the Social Security Administration. It is absolutely essential to know the difference.
Because mixing them up can cause massive headaches down the road.
Massive headaches, yes.
So we'll start with the most recognizable one, the SSN, or Social Security number.
Yep.
This is that 9-digit number for U.S. citizens and people authorized to work permanently, like green card holders.
It's the
Whole
whole
package, right?
Taxes, work, benefits.
It's the full package. Now, let's talk about the ITM, the Individual Taxpayer Identification Number. This is specifically for people who are not eligible for an SSN.
Okay.
So think certain non-resident aliens or U.S. residents with a foreign status who still need to comply with U.S. tax law. The key thing to remember is an ITN always starts with the number 9.
And it's only for tax reporting.
Strictly for federal tax reporting purposes only.
Wait, I want to stop you there because that limitation is so often misunderstood. If someone is freelancing with an ITN, what does it legally not grant them? It does not grant you immigration status. It doesn't grant you general work authorization in the U.S. workforce. And crucially, it doesn't qualify you for big benefits like Social Security or the Earned Income Tax Credit.
So it's purely a compliance tool.
It's purely a tax compliance mechanism. If you earn income here, you need a way to report it. The ITN gives you that way.
That makes perfect sense. And speaking of compliance, what happens if someone, starts with an ITN, they build a business, and then later they become a permanent resident and get an SSN? Is that a complicated mess?
It can be. It can be if you don't handle it right. The IRS only wants you using one unique identification number.
Right.
So if you get an SSN, you have to stop using the ITN immediately. Then you need to notify the IRS so they can merge all your historical tax records under your new SSN.
So it requires you to be proactive.
Very proactive, or you risk having these split tax histories.
Okay, that brings us to, I think, the most powerful tool for this whole conversation, the EIN, or Employer Identification Number.
The federal tax ID number.
And unlike the others, this is specifically to identify a business entity, an LLC, a corporation, whatever it might be.
And here is a strategic nugget for you. Every business owner, regardless of their status, should aim to use an EIN
Why?
because it serves as a firewall between your personal finances and your business operations.
So even if I'm just a single member LLC, no employees, why is it worth the trouble to get an EIN instead of just using my SSN or ITN?
For three critical reasons. First, privacy.
Okay.
Every time you fill out a W-9 for a client, you're giving them your ID number. Using an EIN keeps your SSN or ITIN safe.
That's a great point.
Second, professionalism. You must have an EIN to open a dedicated business bank account.
Okay.
And third, and this is the big one, it's the gateway to building independent business credit. You can't do it with your personal number.
This is where it really clicks. We're establishing a separate identity for the business. Let's talk brass tacks then. The specific process of getting an EIN, which seems especially tricky for non-U.S. residents.
Oh, the misinformation is unbelievable. Let's just tackle the top 5 myths right now. Because people pay hundreds of dollars for what is, a free government service.
Okay, myth number 1. Getting an EIN costs a mandatory fee.
False. It is completely free from the IRS. If you pay someone, you are paying for their service, not the number itself.
Myth number 2. You have to be a U.S. citizen or a permanent resident to get an EIN for a U.S. company.
Absolutely false. There are 0 citizenship or residency requirements to form a U.S. LLC or get an EIN for it. The system is designed to handle foreign ownership.
What about myth 3, that you need a U.S. address to apply?
Also false, but this one's a little misleading. You can use a non-U.S. mailing address on the application, But we highly recommend trying to get a U.S. address, even a virtual one, because almost all U.S. banks will require a U.S. address to open that business bank account. The IRS is flexible, the banks are not so much.
And the final two are procedural. So myth number 4. You can apply online, instantly, even if you don't have an SSN or an ITN.
False. The IRS online application is great, and it's gated. It requires the responsible party, that's usually the owner, to have a valid SSN or ITIN for security verification.
So if you are a non-resident without either of those, what is the official correct path?
You must use Form SS4, the application for employer identification number. And you have to submit it by mail or by fax. That's the official instruction for foreign applicants.
And I find this fascinating, but on that form where it asks for the ID number, you literally just write the word foreign.
You do. It sounds so informal, but that is the specific instruction. It signals to the IRS that you're applying under the foreign ownership category.
What's the downside?
The timing. The downside is the timing. Fax used to be a little faster, but now you should probably budget 2.5 to 3.5 months to get your EIN back.
Wow.
Yeah. You have to plan for patience.
That is a significant timeline. So what about sequencing? Do you apply for the EIN before or after the LLC is filed with the state?
Always after. You wait until your LLC is officially approved by the state. This is vital, so the name and details match precisely. You have to submit your approved LLC documents, like the Articles of Organization, along with the Form SS4.
And for these foreign-owned single-member LLCs, you mentioned they face an immediate choice about taxes. This sounds complex.
It is, but let's simplify the consequence. You have two main default choices. Option 1, be treated as a disregarded entity.
Meaning the business is ignored for tax purposes?
Exactly. The owner reports the income personally. But as a foreign-owned disregarded entity, you must also file Form 5472 annually to report all transactions with the LLC.
And what's option 2?
Option 2. You elect to be treated as a C corporation. This means the business pays corporate tax and the owner only pays tax on dividends.
Which requires filing a different form.
Right, Form 8832. The key takeaway for you, the listener, is that this is the moment you absolutely must engage a cross-border tax specialist. Don't guess.
Agreed. So once the structure is up, let's talk about the cold splash of water. Actually paying taxes as an independent operator.
The transition from employee to independent contractor, or IC, is defined by one huge financial shock, the self-employment tax.
Right. For employees, your boss pays half the Social Security and Medicare taxes, you pay the other half. But as an IC, you're paying both halves.
Correct. When you're an employee, your company handles all the withholding. As an IC, none of that happens. You're responsible for the full 15.3% self-employment tax, plus your federal and state income tax.
Which can easily hit 25% or more of your gross income.
That's why new freelancers feel like they are just drowning when tax season hits.
Okay, let's simplify the paper trail for a listener operating as an IC. What's the standard flow?
It starts at the beginning of a job. The IC gives their client a Form W-9.
The request for taxpayer ID.
Right, so the client knows which ID to use, preferably your new EIN. Then, if that client pays you $600 or more in the year, they are required to send you a Form 1099.
And what do you do with that 1099 income?
You, the IC, report all of that income. And even if a client fails to send you a 1099, you still have to report every dollar. You file a Form 1040 and you attach a Schedule C.
Which determines your business profit or loss.
Yes. And finally, you use Schedule SE to calculate exactly how much you owe for that 15.3% Social Security and Medicare tax.
Which brings up a critical point. Cash flow. If no one's withholding that 25%, how does a new business owner avoid a massive tax bill at the end of the year?
The standard conservative advice is to save 21 to 25% of every single payment you get. Put it in a separate savings account labeled tax money.
And beyond that, the IRS advises making quarterly estimated tax payments.
Yes, if you expect to owe $1,000 or more annually.
And if you don't, what's the risk of skipping those?
A penalty. A penalty for underpayment of estimated tax. If you project your total tax bill to be over 10 grand for the year, you're almost certainly going to need to make those payments to stay in compliance and avoid those penalties.
Okay, on the brighter side, we have deductions. Business expenses are a huge way to lower that taxable income.
They are vital. Things like advertising, insurance, software, supplies, professional fees, they're all legitimate deductions. But here is the major caveat that saves people in an audit.
Meticulous record keeping.
Meticulous record keeping. That sounds like a story waiting to happen, doesn't it?
So what does meticulous mean to the IRS?
It means for every single expense, you need 4 things. The date, the purpose, the amount, and a copy of the receipt. An auditor doesn't care about your bank statement. They want the physical proof and a clear business purpose.
So get an app, take a picture of the receipt right away.
Immediately. If you don't track it, you can't deduct it. Simple as that.
That is excellent advice. Now let's pivot to financing. We've established the structure. How do you get money? If your personal credit is low, this is often the biggest hurdle.
Well, the unfortunate reality is that for a brand new LLC, most lenders will require a personal guarantee.
So your personal credit score is still the key factor at the start.
Initially, yes. If your personal credit is low, the first strategic step has to be working on that foundation.
But the long-term goal is complete financial independence for the company, right?
Yeah.
How do we build that separate business credit profile from scratch?
It requires discipline and separation. So step 1 we've covered, form an LLC or a corporation. Step 2, use your EIN for everything, never your SSN. Step 3, open and exclusively use that business bank account.
And then we dive into the world of business credit bureaus, which is different.
Yes. Step 4, you must apply for a DUNS number from Dun & Bradstreet. This is your business's unique ID in the credit world. Once you have that, D&B can generate your Paydex score.
Which is like the business version of a FICO score.
It's the 0 to 100 business equivalent, exactly.
Okay, and step 5 is the game changer, I think. Vendor trade lines. Explain that in plain language.
A vendor trade line is just a line of credit from a supplier. When we talk about net 30 or net 60 accounts, it just means the supplier gives you 30 or 60 days to pay the invoice after they ship the product.
So it's like a mini loan from your supplier?
Exactly. And the value is immense. It conserves your cash flow, and more importantly, if the vendor reports that payment to the business credit bureaus, you are actively building trade references.
And you need a few of those to get started.
You need at least 3 valid reporting trade lines to establish a good business credit history.
And the most important rule of vendor credit.
Pay on time. Or even better, pay early. Your Paydex score rewards companies that pay within terms. Pay late. And it really hurts your ability to get bigger loans down the line.
What about those listeners who need capital right now, but their personal credit is still below average? Traditional banks are probably a no-go.
This is where alternative or online lenders come into play with so-called bad credit business loans. They often weigh the business's revenue and cash flow more heavily than the owner's personal score.
So you could look into peer-to-peer lending platforms.
You could. And the most accessible, but also potentially most expensive option is often a merchant cash advance.
Ah, the MCA.
It is. An MCA is basically a lump sum of cash that you repay with a percentage of your daily credit card sales. They're quick to approve, but they are notorious for having very high effective interest rates.
So use with caution?
Extreme caution. Only if you have a high certainty return on that investment.
To maximize your approval chances with any lender when your credit is low, what's the final advice?
Focus on presenting business strength. Show a strong, organized business plan. Highlight consistent, stable income. You can also offer collateral or, if possible, use a cosigner with stronger credit. Transparency helps too.
So what does this all mean? We've covered the roadmap for identity, SSN, ITIN, EIN. We've covered operations, managing that self-employment tax shock. And we've covered the path to resilience, building separated business credit.
That foundation is solid, but we have to end with one final, crucial piece of context for any listener who is not a U.S. citizen.
Okay.
U.S. business tax law for foreign owners is highly complicated. The tax rate you pay depends heavily on your home country's tax treaty with the U.S.
It also depends on where the money is actually generated, which is where you get those complicated terms like effectively connected income, ECI.
Right. ECI is income tied directly to a business being actively conducted in the U.S. If your income is ECI, you're taxed at the same standard rates as residents.
And if it's not?
If it's passive income, or what's called FDAT, it's usually taxed at a flat 30% rate, which can often be lowered or eliminated by those tax treaties.
So that international framework adds this whole final layer of complexity.
Exactly. And because worldwide information sharing agreements exist, they are designed to make sure you file and pay taxes properly in both the U.S. and your home country. You just can't afford to rely on general information.
Which leads us to our final provocative thought for you, the listener. Understanding these IDs and credit strategies is only the critical first step.
Due to the complexity of international tax compliance, you must always consult with a certified public accountant, a CPA, who specializes in cross-border U.S. tax law. They can determine your exact status and obligations in both countries.
Don't let compliance be your downfall. Get specialized help.